Hi world, hi universe. So you see me again today in 100 Days Live with Sonya. And yeah, the time runs very fast and it is already 20 days of 100 Days Live with Sonya, you see. And this is the place of the experts share their experiences and also their expertise, of course, and yeah, strategies in life and business so that they reach their goals. And today we have a very special guest. He jumped in right away when he knew there was an empty slot, and yeah, I'm very happy that he is here today. This is my first time with him. Actually, this is my first time to know him also. And he is a very great advisor in finance. So if you have a lot of headaches about money today or a lot of yeah confusion about investment, which one that is good, which one is not, and then if you have difficulties in manage your money or also even make your money, then you can ask him any question. So welcome, Kristopher Meuwissen. Do I pronounce it all right?
Yes, Sonya, all good. You got it right. That's yeah, very good. I can't believe that you knew it was Dutch straight off the bat. It doesn't happen often.
Oh yeah, I've been to Netherlands before and I love it there. Actually, it is my dream country to live there. And tell me a bit about you because I read your biography because this is our first time knowing each other, right? And then
Yeah.
thank you for jumping right away to 100 Days Live with Sonya. And then what makes you join me directly and give your everything? I believe that you are going to give your everything in 100 Days Live with Sonya for our audience, right?
Yeah, absolutely. Absolutely. To tell you a little bit about me, I am an Australian financial advisor. I am the director and founder of Wealtheon Financial Services, and we are a full service financial advice firm that helps business owners who are time poor, who want to get ahead financially, to pay less tax, understand their investments, and make them grow, so that way they can create a passive income and spend more time with the people and doing the things that they love to do. So we help business owners who are so focused on their business, and they spend 99% of their time in there, that the last thing that they want to do when they finish the workday and go back to their family or their friends and that sort of thing is start to work out what investments they're going to do and how they're actually going to structure their income and those sorts of things. So we take away all the confusion, we figure out all the legalities behind it, we understand the system, and we help them actually implement really smart strategies to get ahead.
Hmm. And it is very interesting when I read your bio. It's like you became a financial advisor in the age of 20. How did it
Yeah.
happen? Are you a genius or something like that?
Well, look, my wife wouldn't call me a genius, but
Yes.
I think that no, it's got to do with hard work, dedication, and a little bit of luck.
Mm.
So it was dinner table talk for me. My parents had a financial advice business while I was growing up, and when the opportunity sort of came up when I was 18 and I'd finished school to work in an advice business, I took that opportunity, and within a couple of years I'd done my studies, and now I'm licensed to give advice, and I've been doing it for quite a long time now, which has been great.
Wow, it's very amazing because I remember in my 20s I was still, studying and hang around with friends. I didn't imagine that I would be today meeting someone like you, the professional in financial world,
Yeah, yeah.
And at that time, so it must be you start very, very young
Yeah. So I
in the
started obviously
financial world.
started at 18, and found out that I'm pretty good at it. And so by 20, I was licensed to give advice, and it's been a journey. But I'm 28 now, and yeah, we're doing really well, and we're rocking along nicely, and helping business owners get to that pinnacle of success, which has been good.
Why did you choose the financial department or financial world? as
It's
your
actually
expertise?
um, it's actually a really good question. It wasn't because that was where I was drawn to or my grand passion in life. I sort of fell into it because obviously it being dinner table talk for me growing up. My mum got quite unwell when I was 18. I have a much younger brother and sister, and so I took an opportunity in the financial advice area that I was able to achieve and spend a lot of time supporting my family and being able to be there and work with them. And it sort of just so happened, like I said, I was very good at it, and I was able to continue on and actually make a career out of it. So I didn't realise that that's where I wanted to be. I didn't, it wasn't where I was intending to be. It's at 18, but that's sort of how it all fell out. And it turns out that I'm good at it. I really like it, and yeah, we keep doing good things, so we keep doing it, which is good.
Yeah, Munir. So, did you study in Australia, or you moved to Australia after becoming the CEO?
No. I grew up, lived in Australia, lived in country Victoria, and then a few years ago I moved up to Queensland, up to northern Australia, to where Whitehaven Beach is, Heart Reef, and the Whitsundays. And I've recently just moved back down to my home state of Victoria in the cold. And my wife and I, whilst we have a financial planning business, we've actually just bought a vineyard. So we're making wine now as well, which is very cool.
Wow.
Yeah.
That sounds amazing. Everything is about business in your mind, also in the family. It's been growing in the family, well, right? And today our title is turning business profit into personal assets to create a passive income. And
Absolutely.
we have a lot of assumes about passive income. We have a lot of misunderstanding about what passive income is. Actually, would you like to explain what passive income is?
Yeah, passive income is when you've got something, whether it's an investment or a business or something along those lines, that you're not putting in any extra hours into, and it's actually paying you a dividend. So it's paying you income. And that might be in the form of having a directly held rental property that's actually paying you, that someone's paying you rent. It might be that you are an owner of a private business that you've been able to step away from, and it's running on its own, and it's just generating you income. It might be that your personal assets are invested into listed assets like real estate investment trusts, fixed interest type government bonds, and those sorts of things, and also stocks and shares, and you're actually able to pull out a dividend from the profits that those companies are making. So it comes in many forms, and it can, different types of investments will pay different amounts of income, but it's all around having income coming in on a consistent basis that you don't have to put in an extra hour of work into.
So we work for extra hours, but the result or the outcomes will be continuously, right?
Yeah, correct. So so you might be working hard in your business, but your assets are actually producing you income without you having to go and do any more activity in it. So it's just generating you long-term, good, stable income over many years.
Yeah. So what is the difference with the sustainable income?
I suppose the difference is that if you're able to have a sustainable income and you have that passive income, and you have the assets there that are outside of just your business, it means that you have complete freedom. It means that you are able to, if you want to sell that business, your company, or whatever it might be, you're able to actually monetize that, sell it off, and you can go and work on another project. If you've got passive income that's coming in on a consistent basis, what you really have is freedom from having to trade your time for money. And it allows you to do whatever it is that you'd like to do with that time. So it allows you to really focus on what is, I suppose, the most desirable, most important asset.
And then yes, about the this one, We often say about the financial freedom or something like that, right? And does it
Yeah.
generated from, what is it, from the passive income also, or just the freedom of the management that we can make, or the freedom of the management of the finance itself?
Yeah, that's actually a really good question. So when we're talking about financial freedom, the fact of the matter is it's going to look different for you to what it will for me. So
Mm-hmm.
financial freedom, the first step of that is actually understanding what it means to you. Does it mean having $10 million in the bank, or does it mean having your own home and security and being able to take time off with your family? So determining what financial freedom actually means for you is the first step in that. So once you understand what that is, then you can actually work towards going and getting it. And if it is $10 million and you want to have $10 million by in the next 10 years, well, then we need to work out what the logical steps are to be able to get to that stage. So understanding when to make those steps, where to actually focus your attention, and what you need to be doing, the amount of risk that you need to take, all goes into it. So that way you can actually get to the point where you are financially free. And it might be having passive income. It might be having lots of different assets. It might be having more time with your family. It might be buying a vineyard in northwestern country Victoria. Whatever complete financial freedom means to you is sort of a personal thing, but it often is quite achievable for most people.
Yeah, that's why I also mentioned about the management in finance, because eventually I believe that everyone can reach their financial freedom anytime as long as they manage their finance well, right?
Yeah, usually it's a case of being a millionaire isn't that hard, really. It's more around
Wow.
time, dedication. It's around time and dedication, because if you have a look at a compounding interest effect and you look at over the course of 20 years, you don't actually have to be directing that much money into those investments. You'll be able to achieve $1 million over the course of 20 years by putting five to $10,000 per annum into an investment that's going to grow at about 8 or 9% per annum on average each year. And if you can do that on a consistent basis, it's not really that hard. It's not that hard to actually do those things. What's hard is dedicating and maybe in certain times of your life sacrificing other things to be able to keep meeting those planned arrangements and those sorts of things, and making sure that you are continuously putting that money aside, and you're continuously actively managing those investments, making sure that you are on the right track and adjusting forward if you're not on the right track. That's the difficult bit, is the actual dedication behind it and the amount of time that you've got. So if you want to make $1 million in a week, you're going to have to do something pretty special, and that's going to be really hard. But if you want to make $1 million over 20 years, it's a totally different sort of a story.
Mm-hmm. So if becoming a millionaire is not that hard, and I hope that I can be a millionaire too also this year. But
Well,
hey, Kris, I am a
maybe we should
millionaire,
sit
but
down
in
and have
my
a chat.
currency. But in my currency, not in your US dollar, you know. When you go
That's
to Bali, then you can get millions of rupiahs
yeah,
easily, right?
yeah, that's it. Yeah, just head over to
Yeah,
Zimbabwe and get plenty of Zimbabwean dollars. Yeah, absolutely.
that's why. And you live like a king from the standard Australian salary, right? So, Kris,
Yeah,
and I heard a lot about six until seven, six, seven figures for the coaches. But actually,
yeah,
there are some coaches who already present that six, seven figures is nothing because you have to pay tax. It is like the net income, or just the gross income, something like that. So, what do you
yeah.
think about it?
I think paying more tax isn't a bad thing. It means that you're making more money, and but I also think that if you're tying your entire worth to how many zeros you have at the end of your salary or at the end of your revenue, I don't think that you're necessarily going to be happy for very long. So I personally think working out what it is that you're wanting out of that money. So is it more time? Is it more freedom to do the things that you want to do? Is it that you want to be able to purchase new cars and that sort of thing? And understanding what it is that you want with that money is where you're actually going to find that happiness. But look, if you're making 6 figures, if you're making 7 figures, if you're in a coaching business, if you're in any sort of a business, more money comes with more tax generally. It comes with more problems around, you might have to put on more staff, you might have to have more costs and those sorts of things. So, whilst more money is usually good, I'd say that you have to get the trade-off right. If it's more money but it's sucking up all of your time and you're super stressed about it, then maybe making slightly less and having less stress and more time is a better outcome for you.
I understand. And then for us, if we haven't invested before, or we haven't have had any plans for investment or to get the passive income, what should we do?
It's a really good question. So there's quite a few things that you can do. The first thing that you need to do, the absolute first thing you need to do, is be really honest with yourself and understand where you are financially. And it might be in a really good position, might be in a really bad position. But you need to know what the facts and the figures are, what the dollars and cents coming in, what it is that's going out, and where it's all going and where it's all being held. Once you know where it is and you understand what you have to be able to actually invest, and it might be $10,000, it might be $100,000, it might be $1,000, you then need to start asking yourself, what are the right investments for me? And the right investments, you need to understand that you need to be in an investment that you can afford, for one. So if you have $1,000, going and purchasing a property is unlikely, and it's probably may not be the right thing for you. But if you have $50,000, it might be a good opportunity. So understanding what investments you can actually afford to get into, you need to get into an investment that's going to be able to provide you with the amount of returns and whether or not it's income or growth over the long term that you're going to need. You need to be in an investment that you can understand, and you need to be in an investment that you can put your head down on the pillow at night and go to sleep soundly knowing that things are going to be okay. How you can actually get into these investments and what these often look like, the 4 major ones are things like cash type products, the bonds market or the debt market, it's stocks and shares and owning businesses, and it's also property. So they're the 4 major areas that you can look at. And I would say that if you're wanting to start investing, they're the areas that you really need to be focusing on. You can buy listed investments really, really cheaply. So if you're purchasing them on the US stock exchange, the Australian stock exchange, all those sorts of different things, it can cost you as little as $10 to purchase a listed asset. And you can even diversify your assets across a lot of different areas by looking at investing in things like managed funds, listed investment companies, exchange traded funds, and those sorts of things. And so that way you can get a really cost-effective investment that is investing across a lot of different areas, and it's not going to cost you very much money to do so. And it's probably going to pay you really good income, and over the long term should give you some really good capital growth. But they're the things that you need to do to start, is understand where you are, understand where you want to be, and then have a look at what the right investments are for you.
Oh, that is really interesting. And then are they not so risky when we have very limited money, because of the chaos in the whole world? And then, yeah, of course, we are really scared to invest in something, because not only invest in something, even to make money is also a mess for us last year, right?
Yeah, well, it comes down to timing, and it comes down to how long you can actually invest for. Because if you need $10,000 this year and you have $10,000 in the bank, then you probably shouldn't be investing $10,000. If you need $10,000 this year and you have $20,000 in the bank, and you're not going to need that other $10,000 for the next 3, 4, 5+ years, then you should be realistically looking at investing. And this is where you need to start to understand of what the actual time frame is around the investment and how long you can put that money away. Because if you are looking for an investment over the next couple of months and you put it into a stock and it drops, whilst it might be a great stock, it might be a great business, it might be another 2 or 3 or 5 years before that really starts to pan out and you start to really reap the rewards of that investment. So you really need to understand where it is that you're at and where you want to be and how much you can actually afford to put into the investment. And if it's only that you can afford to put in $100 into an investment, great. If you can lock that $100 away for the next few years, it's going to be better than having it just sitting in the bank. If you can, if you've got $5,000 that you can put away, there's $10,000. Amazing. Start with something and add to it over time. Add to it incrementally, so that way, over that longer period of time, you can start to see some really great results.
Yeah, I don't know about putting the money in the bank because I experienced it when we put it there. It doesn't make much, just very different if we invest in business, right? So why is it property that is one of the way we can invest in this kind of condition? Because I knew that property was very down last year, right? So there were so many properties that were sold very, very cheap here.
Well, it depends on where you are in the world. Here in Australia, property is a booming asset through most of the country, because land and property is quite scarce. So it's not about all different types of property. It's property, when you're having a look at it, it's also around about the type of property that you're getting into. And it might be that you should be looking at residential property over commercial and infrastructure projects, or vice versa. It might be that you should be looking at big infrastructure projects which you can purchase listed. And so there's a lot of different aspects to property. But when you're looking at property, one of the benefits and the value of most property projects is that if you are going to purchase a home and you're going to put someone in there who's going to rent that home for you, then realistically, you should be able to get consistent income from that. And what you're then able to do is potentially use that income to pay off the home loan or the loan that you've taken to be able to purchase that property. And then you're hoping that the property will go up in value. Again, not over the next month or two. It's not about short-term winning. It's about long-term gains. So when you're looking at investing in these assets, when you're looking at investing in assets that grow, like investing in stocks, like investing in real estate trusts, like investing in real estate in general, the more time that you have in the market, generally, the better it will be for you. So when you're purchasing into a property, you don't want to be necessarily purchasing in and out and in and out, because it's quite a costly endeavour to do. It's more around finding the right place, one that you can afford, that's going to be able to have good tenants in it. You can purchase it, put the tenants in, have those tenants pay you an income, maintain the property, and then in 5 or 10 years, have a look at the asset value and either potentially cash out then or utilise the equity and the asset to leverage off that asset and potentially purchase another one.
So it is the residential one that we need to choose in this kind of condition that looks better also with the tenants that we can put in, right?
It depends on where you are in the world, and it depends on what the local markets are doing. Because here in Australia, residential property markets are doing relatively okay, but commercial property is not doing so well. In the US, it might be the complete opposite. In India or China, it might be different again. It comes down to your local market, and it comes down to where it is that you're looking. If you're looking to buy things directly and you want to hold that asset directly, then you need to do a lot of research around the area that you're wanting to purchase. If it's around purchasing an real estate investment trust and getting into a listed asset, you need to understand what assets that trust is holding, where those assets are being held, and then making up or speaking with someone like myself where you're actually able to get some advice on what the likely outcome should be and whether or not it's going to be a good investment.
Yeah, and then how long can we harvest from our property investment if we put the money in? Because yeah, I believe that maybe cannot be in the short term for the property, right? Unless if you are very good at property business. If you do nothing, then how long can we harvest it? Should we wait for many years until the value increase or something like that,
Well,
Chris?
I think you need to give it a few years at least 2 to 3 years. But you need to be
2 3 years.
assessing. You need to be at least 2 to 3 years, but
Mm-hmm.
realistically, you should be expecting to hold it for at least 5 years. And
Mm-hmm.
what you should be doing is every 6 to 12 months, you should be looking at where you are, what's
Mm-hmm.
happening, and what's going on with your property, what's going on with your other investments, and how can you potentially utilize those investments to do better and make more money. And it might be a case that in 3 years' time, and this is a hypothetical for you, Sonya, but it might be a case in 3 years'
Mm-hmm.
time, your property purchase that you own has gone up and is now valued a lot more than what it previously was. And you might be able to find that you can actually get finance and utilize the equity within that property to go and purchase other investments, to purchase another business or to purchase another property and do those sorts of things as well. So you need to reassess where you are on a consistent and regular basis. It doesn't have to
Mm-hmm.
be an incredible deep dive, but you need to understand where you are, where you're going, and to make sure that you're still on track to meet your goals of your financial freedom.
Is it a good idea if we take the credit of a house or an apartment, something like that, for the investment? Because we
Maybe
have to
it's
pay the interest, so we don't pay cash to buy it, right?
maybe it comes down to who you are and where you are in the world again. Because here in
Mm.
Australia, for example, we have something amazing called negative gearing, which allows you to claim a tax deduction for a portion of the interest that is charged on a loan if you're making an investment, which means that
Mm-hmm.
going into more debt can really boost your wealth over the medium to long term. That being said, there might not be as many tax advantages where you are. There might not be. You might not have the capacity to pay any more interest. You have to have a look at the asset that you're purchasing. You have to have a look at the interest that you're going to be paying. You have to have a look at your ability to pay the money back, when you can pay it back, and you need to be able to afford that. So whilst it can be a great idea, and it's how a lot of people make a lot of money by leveraging and by borrowing money, it can also be
Mm.
a disaster. So you need to understand. You need to sit down with someone like myself, who's licensed in your area, and who understands those markets. That you can say, "Hey, look, I'd like to speak to you about where I'm at, what I'm doing, and how I should actually make this work for me."
Yes, and you mentioned also about stocks and share. What about the beginners? Because there are so many people who are trapped into it because of the agents. Is there any way that we can learn by ourselves personally without any agents to buy our stocks and our shares?
So do you mean how do you move away from having to use a stockbroker and those sorts of things?
Yeah, yeah. I mean, there are some stock and share agents that
Mm-hmm.
usually make class and then want us to join in. You know what I mean? And then we invest through them, not by ourselves. Is there any way that we can invest by ourselves without learning from those kind of agents?
Absolutely. So again, depending on where you are and the legislation in your country
Mm,
and in your part of the world, you're able to access direct equities. So where you purchase a share of a business and then you have voting rights in that business, and you are often able to call up the stock exchange and create an account, or potentially utilize a subsidiary. I think one in the US is called Robinhood. I know one here in Australia is
mm,
called ComSec. There's a lot of different types of administration platforms that whilst they're not an actual stockbroker, they don't manage the money for you, they can hold on to the investments in the administration platform. And so you can actually go and purchase investments that are listed through those platforms. So that's one way that you can do it. Another way is that you can, and that's by holding the stock directly. Another way that you can do it is by going through a fund manager, which is, I think, what you were explaining there, where you actually purchase units in a managed fund, and it might be in a trust structure or something along those lines. And what you're doing is you're buying a pooled amount of money, and then you're leaving it up to someone else to actually manage that for you. That can be a really good way of diversifying and spreading around the risk within your investments. But like you said, you don't have any control over what they invest in at the end of the day. So another way that you can do it is you can purchase a listed investment company, or you can purchase what we call exchange traded funds as well. And exchange traded funds are really low cost funds that usually follow an index that have certain parameters, and they try and follow a whole market. So it might be a Vanguard or a Van Eck exchange traded fund that is following the entirety of the Dow Jones. And so you purchase this ETF, this exchange traded fund, and then you essentially get what the Dow Jones has done. So you get all the winners and you get all the losers. And if it goes up, amazing, and if it doesn't, well, then you've dropped in value, and that's why you need to hold it for a number of years. So there's quite a lot of different ways that you can invest in businesses. Obviously, directly holding them, going through a fund manager, going through an exchange traded fund, a listed investment company, and a number of other ways. But they're the most common ones.
Oh, very nice, Kris, that you share a lot with us. Also for the beginners, because there are so many coaches who were busy in coaching and didn't think about another investment. So when the coaching world is in shake, shaking, and then they have nothing else for the income, right? So it is a great
That's
way
it.
for you to share here. And Kris, in your company, Wealtheon, are your clients only from Australia, or also you serve the people around the world?
At the moment, my clients are only in Australia, and that's because I'm a licensed professional in Australia. But we are looking at the possibility of entering into and getting licensed through the UK and then even to the US markets as well. So, all of my clients currently are here in Australia and are using the Australian system. But we will hopefully have an option for some people around the world to be able to join us in the next year or two.
Yeah, and then what is your plan in the future for the Wealtheon and also for your own business life?
So my plan is to have about 150 really good quality clients that I can work with, that I have an ongoing relationship with. So we don't want to have a mega business, because I want to be able to spend enough time on those clients and give them a great service and help them build up to really be, build up a lot of wealth. But more importantly for me is to be able to take the property that we're on. So we're on a little farm here. And we have about 5 acres of beautiful Shiraz grapes, and we want to be able to spend a bit of time in the vineyard. We want to be able to make some beautiful wine, and we want to be able to drink it and sell it as well. So we want people to be able to enjoy that. So my aim is to take Wealtheon and have a small amount of individual clients, create some beautiful wine, and then start maybe speaking and doing a few more podcasts and those sorts of things, and get cracking with that.
Yeah, and I heard that it's a good wine also for the vineyard in Perth, right, in the Perth area. So I think it will
It's
grow
beautiful.
well.
Yeah, it should do.
Yeah, I haven't
Should be
been to
good.
Australia, so I don't know it.
Well, when
But
you come
yes,
to Australia, you can come to our little vineyard. We'll give you some wine, and you can tell me yourself if you think it's good or not.
oh, thank you. I've been to vineyard in how do you call it, meteor. in Germany. So actually, it is a part of France now, but it belonged to Germany before. So it is like in
Yeah.
Alsace or something like that, the area with the black
Okay.
mountain around it. So it was great there also, yeah. And I cook there, so I hope that
Beautiful.
you will now ask me to cook there also in Australia when I come down. I cook for the workers in the wine plant. That's why.
Yeah. Sounds good. Love it. Sounds great.
Yeah, it was very great for the holiday in Europe, I know. And then, Chris, how can our viewers reach you out easily, of course,
Uh, yeah,
after this?
you can either have a look at our website www.wealtheon.com.au and download our resources there, or you can book in a time with me to get a 15-minute slot. You can also find us on Facebook, which is Facebook.com/Wealtheon, Instagram, which is the same, and YouTube as well. So there's a few different ways that you can reach out, and if you want to speak to me directly, you can either contact me on 1800 577 336, or alternatively km@wealtheon.com.au.
Don't forget to type it in the comments after this so that the people can click it easily to your link. And maybe you have the
Beautiful.
giveaways for our viewers, the one from Australia.
Yeah, look, if anyone from Australia is listening, I'm happy to give away for the first 10 people that contact me. I'll give them a bottle of our wine, so long as they're 18 and over, and that sort of thing. But I'll send them a bottle of their wine, and I'll
Oh
even
no.
have an hour and a half free session with them where we map out where they are, what they're doing, and the sort of things that they can do to start moving forward and get ahead.
Well, I invite them because I'm not there in Australia to respond. So, Chris, I really feel happy that you join us today, and I hope that next time you can join us in our other programs also, because there will be more programs for the experts to share their expertise. You see that there are so many people who are lost, and yeah, there are. I mentioned there are so many complaints in the social media that they spend thousands of dollars but without any results from the people they want to to teach them as a coach or also as a trainer, as a mentor. So that's why
Yeah.
I hope with our coaching universe the people can reach the mentors or coaches they want to also, yeah, the financial advisor like you.
Yeah, me too. Me too. And it's been great to have a chat to you, and I appreciate you sitting down and listening to me for the last half an hour or so. So thank you very much, Sonya.
Yeah, thank you. And I would like to greet Jesse Kutri and also Team Gillette. Team Gillette is one of our sponsors. And because without these sponsors, I believe that this show wouldn't happen, because you see 100 days. And even Jesse Kutri from Sense and Stream Media also designed this frame for my stream yard. And I love it, you see. So, yeah, I'm happy
Yeah.
that great people support me, and also I know you, then you can know them also, then we can connect each other, right? And Chris,
Yeah,
what is
sounds
your
great.
message for our viewers?
My message for the viewers is that if you want to be wealthy, you need to start taking action, and you need to understand what it is that you can do that is tried true methods to be able to build up long-term wealth. And you need to really be focusing not just on your business, but also what investments are out there that can start generating you income and capital growth over the long term. So that's the message I have for your viewers.
Thank you so much. And what do you think about 100 days live with Sonya and Sonya herself?
Yeah, love it. You're great fun. Really enjoyed being here. So
Oh,
it all
thank you.
came together yesterday really quickly, and
Bing, bing, bing.
you've been
Yeah, I am good at
yeah,
pushing people, right?
yeah.
But
Yeah,
we
no,
make
thank you.
it, and yeah, because it is great that sometimes the last minute decision is the best decision that we can make, right?
That's it. That's exactly right. Yeah, you've got to go with your
So
gut.
Yes, that's true. So, for our viewers, if you like this show, please register to our coachinguniverse.anitasonya.com, our coachinguniverse.anitasonya.com, and you can upgrade into VIP to get the recordings and other benefits. And I would like to thank you also for the livestreamuniverse.com, belong to Ross Brand. Livestreamuniverse.com belong to Ross Brand, who sponsor our show today. And I thank you and I see you tomorrow. Chris, thank you very much
Thanks
once
very much.
more. See you. Bye bye.
Thank you. See you, Sonia. Appreciate it. Bye.